Well, when you look at these profit numbers, a lot of these tech companies are not really trying to be that profitable. And when they do have profits, they're so low that you can see very high expansions on a percentage basis or a multiple basis of those earnings. I think that's really still not the relevant metric for a lot of these FANG stocks. I think it's still what you're trying to look at is the engagement of their user base, the growth of their user base, and how much they're monetizing it. So I think kind of longer term trends, earnings is less relevant than some of the kind of other metrics that we're looking at in terms of how they're monetizing their user base.
How significant is it that their e-commerce revenues are actually 1% lower? Because of course the bulk of their revenues still come from the e-commerce side of things, but the revenues have begun to, if not stagnate, start dropping. Is that negative on a forward-looking basis?
So you do wonder how much of that is seasonal versus how much of that might be a company that's losing focus, because certainly everyone talks about the Amazon effect on every industry now. You're not immune to anything if you're in any industry from Amazon, and you do wonder if they are overextended to some extent if they're looking at entering the healthcare space or the financial space. But I would be less concerned about the longer term trend in e-commerce. We're still seeing incredible year-over-year growth as kind of the macro trend there. This is probably just a blip in quarterly earnings at this point.
Jay, let's talk about Facebook. It was the big story yesterday. I've never been a member of that social media organization, but they lost users in Europe. They're flat users in North America. Isn't the big challenge here, big picture, that there's only so many people on the planet with access to the internet, and they've got 2/3 of them already on the web?
It's a good question. I mean, at what point does growth for Facebook stop? And of course, at some point, everyone in the population will have access to the internet, to mobile phones, and suddenly the question won't be about user growth, but we're really not worried about that right now. What you're seeing is growth being driven at multiple levels. At the first level, you're just seeing more advertising spend. Advertising spend globally is growing about 7 or 8% a year. So even if they had flat, user growth, there's still a lot of monetization there. Secondly, in the digital space, digital advertising is growing over 18% a year. And you're still seeing the overall pie of number of people joining social media platforms growing at about 13%. So you see so many growing concentric circles here. The user growth for Facebook is going to become less relevant, but you just see so much more advertising dollars directed towards digital media platforms. That's going to be the biggest driving factor going forward, more so than user growth.
So it looks as though you're still pretty constructive on Facebook, and actually I can see that you own it in your portfolio. And so I get it from a point of there are many reasons to be still constructive on the stock here, but at the same time what we have found out is that they will be spending more and more and more to deal with these privacy issues, of course, as a function of the increased scrutiny after Cambridge Analytica, and they have set aside increasing amount of reserves to spend on that side of the business, which will eat into their profitability and potentially over revenue as well. So when you think of that, doesn't it make you a little bit more lukewarm on the stock, given their shifting priorities?
Well, certainly this is going to have an impact on operating margins, and I think the reality is this is a space that has developed so quickly, so fast, that there's some things they have to do to keep their house in order. Yes, they're going to have to look at fake user counts. They're going to have to look at the quality of the content. They're going to have to adapt to new regulations around data. But again, the long-term picture here is still so bright. We're still so focused on the growing advertising numbers being spent in the digital space that, frankly, this is kind of cleaning up their mess behind them and something that was going to happen inevitably. But we're really more focused on kind of the long-term revenue projections for the firm at this point.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.